And he actually had previously expanded his target earlier, 4,900 at one point. Then the S&P entered a technical correction, and John Stoltzfus of Oppenheimer lowered his year-end forecast for the S&P back to 4,400, kind of where it was earlier this year, from that 4,900 mark previously. John Stoltzfus has been listening to this and wants to weigh in on the bunkeremo and beyond, and I'll let you get to that. But first, I want to start to say, how much are you basically saying we've just have run out of time to get to that 4,900 mark?
Yeah, it really is. We had to right size our expectations. We always suggest that to investors as they consider what happens when markets are roiled, so to speak. And what we've got to consider here is the calendar's telling us that we're getting close to a year end. The average rallies are positive. You know, we get positive rallies after a dip like we've seen traditionally or historically, but it's smaller amounts, and there's still lots of uncertainty that bears and nervous investors and those who are skeptics can use to take more profits out of the fabulous rally that we're still living off from the lows of October 12th of last year.
I feel like one strategist after another is basically coming on and saying, give investors a Prozac, because frankly, there is a lot of optimism. They're just not seeing it. How much can you really hinge on fundamentals if the sentiment is just so gloomy and prepared for the worst?
The real problem is, I think that when you're in a Fed funds hike cycle, it takes a while before the marketplace gets a sense that the Fed is indeed not trying to destroy things, and that the Fed might actually succeed in its goals. The Fed isn't infallible, but the Fed has a remarkably simple a mandate, essentially, stable economic growth with maximum employment. Of course, what is it? A few weeks ago, I think it was the daily quote on the Bloomberg was Martin Scorsese, and it was something that like simple is the best, but it's the hardest to achieve. Well, that's what happens in a Fed funds hike cycle. But what happens is eventually the marketplace, and you can see it related to higher prices being accepted by consumers and business, in that you were just mentioning before. There's a sense, okay, we can deal with this now, and we keep moving forward. The Fed has been so sensitive in applying its mandate that it hasn't knocked apart the resilience in the consumer, in business, and the overall economy.
Right.
It's been extraordinary.
John, Michael McKee out with a brilliant idea on the Magnificent Seven. He's going back to the movies, looking at Yul Brynner, Steve McQueen, Charles Bronson, Robert Vaughn, James Coburn, Horst Buchholz, and Brad Dexter. I mean, they were the Magnificent Seven. What do you do with a modern Magnificent Seven? Is Apple going to deliver here? And if you're going gloomy 4,400, do you sell your big tech?
Well, I'm not gloomy of 400 at all. I'm just saying it's more realistic from here to the end of the year. Just wait until we put in our price target for next year.
Go ahead.
That'll be later on.
Well, good. And no one's watching here. Yeah, come on, compliance at OPCO's not watching. Give me a number. Can you pop a 5,000 for next year?
Can't do it. I got compliance breathing down my back. But when we look at this, things are getting better, and we think we're going to see competition return in a lot of spaces. And competition is when all of a sudden you've got everybody is passing on the old higher prices, getting away with it, and then some guy in business or gal discovers the idea of, well, maybe if I give up a little bit what I get in per unit costs, maybe I can make it up big time in volume, and that'll happen across the sectors. But in the meantime, tech is empowering everything, and we don't mean it like in some kind of a moonshot, but in existence today, corporations are doing better, navigating very tough environments, whether it was the financial crisis, whether it was the pandemic, post-pandemic, the supply chain stabilization, getting away from one country's centricity in terms of the global supply chain. All of this technology is enabling a lot of things, both for the consumer as well as for business, and it's a dramatic change. That combined with sensitivity by the Fed, communication, transparency, that we think is, the Bernanke legacy that is still being practiced by Jerome Powell in his own way,
Yeah.
Has a positive effect.
I keep thinking the economy is not the stock market, and this is not necessarily a stock market that's representative of the broader economy. That really is maybe the Russell 2000 or the banking index, the regional banking index. Does your optimism bleed over to small caps, to the KBW index?
Well, I'd say not necessarily to the KBW yet. We've got to wait for the economy to show a greater sustainability going forward, and not as many concerns in terms of commercial real estate and subprime auto loans and things like that. But what we would say is when we look at this picture, overall things are getting better. It's being led by the large caps. But if we get to that point where we get to see the sustainability of the economic expansion becoming predominant in the picture, you're going to want to own smalls and mid caps, and you probably want to consider. For instance, we're near market cap agnostic in some ways because our goal is beyond. We're intermediate to longer term investors, and the valuations are ridiculously low in many quality indices of the small caps and mid caps.
John Stoltzfus, thank you so much.